guys, Michael Edward with True Trading Group. January 3rd, a red day for me. 3 trades, 1 break even, 2 losers. And what I want to talk to you about this video, this is a pretty important video because I want you guys to understand the difference between a good trade and a winning trade because they are not the same thing. Okay, I'm going to walk you through my 2 losing trades, one in TEUM, the other in GALT. I'll show you why I entered where I did, where I got stopped out, why I got stopped out where I did. But it's more important that I talk to you about managing your losers and minimizing your risk. So before I get into my actual trade setups, let me take a second to talk to you and tell you and kind of explain what this video lesson is all about. Losing is part of trading, period. You need to accept that and understand that. If you think being a good trader is about being right all the time, just forget it. Stop trading now. Save yourself the trouble because you're in for a very rude awakening. It is impossible to be right all the time. Losing is part of trading. It is your job as a trader to manage your risk and keep your losses small. I always tell our members in True Trading Group, it's more important keeping your losses small than it is maximizing your gains, because the winners will come. If you go after the right setups and you follow your rules and you stay disciplined, you will catch the 15, 20% winners very, very frequently. And then the 40, 50, 75, 100% winners, those will come. Okay, not all the time, but they'll come. It's why it's more important to, when you have a losing trade, manage that loss and keep it small. And it is, now that you understand that losing is part of trading, now it makes a little bit more sense when I say to you that a good trade and a winning trade is not the same thing, because you can actually lose money and have a losing trade and still have that be a good trade. I lost money on TEUM and GALT today, but they were good trades. And it's important for you guys to understand that, because don't associate every losing trade with, oh man, and you get upset and I made a bad trade or I made a poor decision. Because sometimes you can make a losing trade and make a great decision, both on your entry and on your exit. And when that happens, you need to pat yourself on the back and say, man, I made a really good trade. Because I lost 4% in TEUM and I lost 3.5% on GALT. Tiny losses, guys. And that's what this video is all about. It's not so much about the physical execution of managing your loss. I'll get into that with my actual trades, but it's more the mental aspect of understanding this and not just assuming that a good trade means it was a winning trade, because you can make a winning trade and have it have been a horrible trade. How's that possible, Mike? You might be asking yourself. If I made money, it's got to have been a good trade. Wrong. And I'll give you an example. Let's say you buy a stock at $1. So the math is simple. You buy a stock at $1. Their support at 95 cents. Your stop loss is at 94 cents. So you're risking 6%. Okay. Let's say you buy it at $1. Stock dips to 98. Then it dips to 96. Then it breaks 95. Now it's at 94. You never set a stop loss. You didn't sell anything. Now it's at 92. And you're holding on to it because you think it's going to bounce back. Now you're down 8%. Now it's at 90. Now you're down 10%. And all of a sudden the stock's down to 86%. To 86 cents. Now you're down 14% on the trade. Way too much risk. But then a couple minutes later, the company puts out a press release in the middle of the day. They announce a $25 million contract. Stock shoots up to $1.30. You're happy because you just made 30% on your money. Great trade, you say to yourself. I made 30%, you say to yourself. Wrong. Bad trade. It's a bad trade. And it's because you didn't manage your your risk appropriately and you took on way too much risk to the downside, but you still made money on the trade. So you actually had made a poor trade, but you made money. Okay, and in the case of TEUM and GALT, I lost money, but I still made a good trade. And as soon as you can understand and accept the fact that losing is part of trading, it'll become a lot easier for you to deal with losing and actually be able to, after having a red day, say, you know what, I traded well today. Because the patterns that I went after ended up failing. There were high percentage patterns, they ended up failing, but I was able to manage my risk appropriately and keep my losses small. It's a good day. Let me take it to the charts and I'll walk you guys through my trades. Start with TEUM. TEUM gaps up on news, puts in an initial high right here around 310. Stock then breaks through that high on a little increase in volume. Okay, right here. Stock then pulls in and then bounces off that support level quickly. And you see that initial high held support. I jumped in right here. It's a little bit higher. At $3.18, I got long. Okay. When the stock was bouncing off this initial morning high and it was starting to make its way higher, I came on in chat and I said, guys, I need to see this volume start to pick up. The volume was actually slowing down as the stock was bouncing off that support level. That's a sign of weakness. When a stock breaks through the high of the day like that and then pulls in and finds support, it's okay to see volume slow down when the stock pulls in to test that previous high to see if there's support. But once that support gets put in place and the stock starts to bounce and it starts to get off of that support, you need to see volume start to increase again. And in the case of TEUM, the volume actually was slowing down as the stock was bouncing off of that support level. That's a sign of weakness. That is why TEUM ended up failing and the stock broke back down below that previous morning high, and I got stopped out right there at $3.05 for a minus 4% loss. Okay. And I managed my risk properly. I went after a high percentage pattern. I had my reasons for going after that pattern. And if that volume started to increase right in here, this stock would have ended up doing this. Okay, but that volume never came in. The volume continued to slow down even after the stock bounced off of that support level. And that's why instead of breaking up and out like this, it broke down and that support failed and I got stopped out of my trade. Okay, I'll take a 4% loss any day of the week, guys. If I can keep all my losses under 5%, I'll be the happiest trader you were ever talked to in your life. Okay, because when I'm right, I'm making 15, 25, 18, 22%. So if I'm only losing 5%, I'm crushing it. Okay, and that's what being a consistently profitable trader is all about. That's TEUM. Let me walk you and take you over to GALT, my second loser. Here's GALT. Okay, guys. Here is your initial morning high. Stock has a real strong morning. See, here's the open. Stock opens up and just pushes, boom, explodes. Right off the open, puts in that initial high. I'm like, man, okay, GALT is strong. Strong, right off the open. After it puts in that initial high, the stock pulls in, and then it breaks through the high on a real nice, strong increase in volume. That's a real nice, strong volume bar as the stock busted through the high of the day. And then you start to see that high hold support. Okay, then as the stock starts bouncing off of this new support level, you see a downtrend resistance line put in place as the stock makes lower highs, bouncing off that support level, forming a TTG triangle pattern. The TTG triangle pattern, guys, is the most consistent chart pattern that you can trade when it comes to day trading. Okay, that does not mean it's going to work out 100% of the time. Sometimes the pattern fails. It just happens. There's nothing you can do about it. But what you can do about it is manage your downside and keep your losses small when the trade fails. In this situation with GALT, I got long right here at $4.56, and then I got stopped out right here at $4.40 for a minus 3.5% loss. Okay. Ideally, what you like to see happen is you get long in tier 1 within this downtrend resistance line inside this triangle, and then when the stock breaks out of that triangle and gives you a move like this, and volume starts to increase, you can add to that position and then look for that continuation and look for that follow through. But it never broke out of that downtrend resistance line. That downtrend resistance held, and the support ended up breaking, and the stock broke that previous low and then sold off. Okay, and I managed my risk, and I only lost 3.5%, getting stopped out at 440, rather than holding on to the stock all the way down to here at 415. Okay, big difference between 440 and 415. And that's why I can walk away from a day where I had 2 losing trades to finish the day net negative. I lost money today, but I can still walk away and say, I traded well today. This was a good trading day because I was able to stay disciplined, stick to my stop losses, go manage my risk properly, keep my losers small, and I went after high percentage patterns and high percentage setups. And I will do this again tomorrow and the day after and the week after, the month after, and the year after, because that is what has allowed me over the last decade of my trading career, a little more now, to be consistently profitable and to be where I am today as a trader. And that's what I want you to take away from this video, is understanding that not every good trade means it was a winning trade. You can still make it, you can still have a losing trade and have still made a good trade. I'll see you guys in chat.